welcome to my channel. If you have yet to subscribe, please do so. What I am doing is marking out key levels slash possibly targets. And so how I do that, I start on the higher time frames. I'm going to start on the monthly. As you see, I've switched it over to the monthly. And what I am going to do is mark out last month's high and low. So this red candle is last month. And let's change that to purple. All right. And next from the month, I am going to mark out the weekly. So this right here is last week's low. Now I'm just going to mark out the high of last week's. And let's change it to pink. Well, okay, so this would be the prior week, this red. This would be this last week. And I'm gonna mark out the high and low of that. Now, I notice here, right? This 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 area here would be a weekly bullish FVG. So I'm gonna mark that out, in which it was respected. Okay, so from here to this pink line, it was respected. And what that means is it came down, swiped down, closed inside, then this past week it closed above. So that means that it respected this FVG. Okay. Now I am actually let me change this color to, let's make it green. There we go. All right. Also too, if you notice that the top of this candle here also coincides with the top of this bullish FVG. Again, it closed above. Now, also too, what I notice is 1, 2, 3. We have a triple top. We have a triple top as well. And so like equal lows, equal highs, triple lows, triple highs, that is bearish. So even though this is a strong bullish candle, we have 3 touches at the same point, okay? And so this could completely reverse back down. The fact that it did not, for this prior week, it did not close above and it couldn't get higher than these two, that is a strong sign for possibly a reversal. And especially the news over the weekend is that The Strait of Hormuz is still closed, but I believe on Friday it was open. So again, a lot of back and forth, back and forth, back and forth. Um, so anytime the Strait of Hormuz is closed, like that means basically, no deal, whatever the case may be. The market does not like the bad news um, when it comes to this war in Iran. But I also want to say that, uh, yeah, it doesn't like the bad news, and so what I'm anticipating when market opens today, that crude oil is going to shoot up like crazy, and the Nasdaq is going to shoot down like crazy. All right, so we have our weekly. The next level um, you should be looking at is your daily. So, oh, and check this out. You see this rejection? This is a rejection here, this candle right here. You see these touches, 1, 2, 3, 4. So this is like more than a triple touch. Anytime, so this is a strong resistance level at this point. This is a very strong resistance level. And unless it gaps up when market opens, it will come down. Okay. Um, anyways, so daily. All right. This is the daily candle. Let's mark out the daily. Change this color to yellow. So this is the daily, high and low. Okay. And an area of interest. This is a bullish fair value gap on the daily. We're going to change this color too. Okay. And again, it did respect it, right? On Thursday, it closed at it, and on Friday, it closed above. But again, it could not break past this level. What is this level? 3102. So this is your daily. So the boxes, the lines of the boxes, these are key levels slash potential target points, whether you are going to go long or short. What you will want to look at is when the candle reaches any one of these levels, you want to see how it reacts. Okay? You want to see how it reacts. And if it reacts like this is a rejection candle. If it reacts like this is a rejection candle, right? Start getting familiarized with what a rejection candle looks like. This is a rejection candle, okay? If it reacts like that, rather bullish or bearish, you potentially could jump into a position and take it to the next key level that you have marked on your calendar. I mean, not your calendar, I'm sorry, your chart. All right, so we got our daily. Now, let's go to the 4-hour. Okay, so here's our 4-hour. On our 4-hour, let's mark out the high and the low. Well, the high is already marked out. So on the daily coincides with the high of the last 4-hour candle, which is great. And then the low, let's change this color. This is the low of the 4-hour candle. Now, we have a very, 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 very tiny bullish FVG, which is here. And again, it did respect it, right? You see how when it hit that FVG, how it reacted? And then the next 4 hour candle, okay? Now, paying attention. On this 4 hour candle, we have a bearish FVG, which the 4 hour was unable to close above it. And we're gonna, let's change this color as well. And I want to change this color as well so I know that this is 4 hour. All right. So it closed right on the line. It couldn't close above it, but it closed right at it on this FEG. Okay. So again, these are considered areas of interest. All right. So this is the 4 hour. We got our 4 hour marked out. Now let's go to the 1 hour. Okay, now on the 1 hour, this would be this red candle right here would be the last low. So if when the market opens and it opens bearish, I would be looking to take it down here to this low at 29,674. Well, it should get there at some point, right? Sundays is slow markets, not enough volume. Um, it could initially open up, drop down, and then stay chopping sideways for hours until tomorrow New York session opens. Whatever the case may be, this right here is good. It's a good mark out. I do want to make note that on the 1 hour, we do have a bullish FVG here. And I'm going to change this color. All right. And it was respected, obviously, because this 1 hour candle did close above it. I'm going to go down to the 30-minute. I'm not going to mark out any more levels. Well, here's a 30-minute FVG. That one's better. So 30-minute. So again, these could all be considered areas of interest, key levels. And so I'm on a smaller time frame on the 5-minute. So these are target areas, right? Whether it's bullish or bearish, if there's a opportunity to be able to jump in a short or a long position, these would be target areas, okay? These will all be target areas. And then let's go to the 15-minute. So when the market open, it could shoot up here and immediately reject back down. Boom. Now, if you don't like all of the lines on your chart, you could just focus on, your daily, your previous daily high and low, and mark out from the daily. You can mark out your 4 hour and then your 1 hour, so you won't have that many lines on your chart. But these areas of the bullish and bearish fair value gaps, those are what you call areas of interest, which means basically um, whether bullish or bearish is going to draw to these areas. These are areas in which it will draw to. These levels is something in which it will draw to. We have New York's close up here, and then New York high is up here. We have New York's low down here. These are also areas of interest. New York open, previous day high, New York's low, London low. So these are all considered areas of interest, points of interest, POI, which is the proper terminology, POI, okay? I do not have a particular bias. Um, I don't have a particular bias, and it doesn't make me any difference if it goes up or down. However, even though I don't have a bias, just based off of the news over the weekend, I am expecting for this to be bearish for the day. Um, Now, Trump could come out, at some point today and say, oh, the Strait of Hormuz is open, and it would shoot up like crazy, right? And really, to be honest, since Trump has been in office, this has what the market has been. Um, the market has been very psychotic. Don't know which way to go, up or down, up or down, up or down. Um, I was in a trade. Let me see if I can find that trade. I was in a trade on Friday. And what was it, Friday morning? I was in a trade Friday morning, and let's switch over to the 5 minute. Right when my target hit, I really want to say that I can't remember the time, but I know I was in a trade and it was struggling to hit my target. I was in a long position. It was struggling to hit my target. Luckily, I had my target set a few points away from the actual target. And so, good thing is, it did hit my target, but the intended target, when it touched it, it completely rejected out of nowhere. And so a lot of people's accounts got destroyed. I want to say it was this candle right here because it literally came out of freaking nowhere. It hit it and just down. I want to say it was this candle. And so this candle, 29, 819, and yeah, probably this candle. It was like a, yep, yep, yep. So this candle right here, it was like a 60, 70 point drop out of freaking nowhere. Crazy work. Crazy, crazy, crazy work. And so, for me, when I am setting my, like when I'm in a position, whether short or long, I usually try to have my target right below the intended target because at any point in time it could just reverse on you, and it's just never a good thing, right? Completely destroy your account. Whatever the case may be, these are the key levels that you should be looking for. You could go and mark your own chart out, um, and you use these key levels as your point of interest slash targets, whatever the case may be. All right, guys, I will see you probably later on today. Thanks, guys.